everybody? I am back here for the live sessions. I missed y'all. I was on vacation for a little bit. Tried some experimentation with live on TikTok studios only. It was cool, but there's certain formats that it didn't do for me that I like. And then I don't get to stream live to YouTube at the same time. So switching back over to the OBS. Happy to be here. And we're going to jump back into the market this week. I know it's Friday. This was a pretty eventful week. When we look at what was going on with Iran and Israel, there's been that war conflict that struck up again. Pretty sure everybody's aware of that by now. And we're waiting to see if the United States is going to enter this conflict at any point. I don't think we will, but it looks like we're preparing to, and I don't think that is going to have a positive effect on the economy if it does occur. So everybody's on edge waiting for that news. Trump has said he's delayed entering the war, giving them, I think another week to see if they could talk it out instead of bombing each other more. And then if that decision is not made within a week, then the U.S. will be joining the war. So we have to make sure that we are paying attention to what happens over the weekend to determine how we want to open next week. Last week, I wanted to jump in on some Coinbase calls, which I did, and those paid beautifully this week. That was a great payoff this week for us. Hold on. And let me pull up the Coinbase chart so we can see. I called out Coinbase on the weekly chart. I saw a breakout getting ready to occur right down here where we had this price alert line in the 255 area to 260. I knew it was a breakout zone for Coinbase. Once we caught support here at this 243 level, down to 235 was the lowest. I knew once we got back above 260, it was going to be time for a push. Because Coinbase had been lagging Bitcoin a lot. Coinbase was just added to the NASDAQ, so that caused this jump up we see right here in price from down here up to that 260. That caused that jump. And I didn't feel like that Coinbase being added into the NASDAQ was fully priced in here. So I felt like we had more of a push to come. But this push was... the catalyst for this push was the Genius Act being passed, which allows stablecoin usage to be regulated and easier to access for the banking system here in the country. So stablecoin usage is probably going to start to shoot up. And Circle, one of the stablecoin companies out there, CRCL is the ticker symbol, they have gone crazy because of that. Let's look at their ticker symbol real quick and pull them up. They came out 3 weeks ago. Literally, they opened up at $70 3 weeks ago. They pushed up to $122 in their opening week, which was crazy. The next week, $137, but it was kind of wicky. This was your chance to jump in this second week right here with the indecisiveness came in, and it had that pullback down to close to $100. That was the time to catch Circles when I should have caught it, but we missed that, and now it's at $227 already. Ridiculous. Some ways you can't catch them all, but that's one I definitely wish I caught. I cannot lie. That was painful missing that. What is going on with this? Google is acting funny right now. All right, there we go. I had some people that were looking to trade Tesla this past week as well. I'm staying away from Tesla personally. I'm not sure where they're going to go with the robotics, but I could see them stalling out for a little while until they get that taken care of, because the robotics situation is major delay. And that's really what most of their company's valuation is based off of. Let's see what they're doing today. Okay, so they're struggling a little bit at open. They had the 320 level. I figured they would reject that 330, which they did. See if they come back down to this 315 zone. I can see them chopping around 300 to 330 for a while until the robotics technology is solidified. But if you catch them and you get them above 335, 340, if you're in a short call on that, I would look to take some profit up there, honestly. But let's go into the news. What's happening in the news today? Let's go over some quick notes I took for the news. Some interesting things I saw. I already discussed Trump delaying the American involvement in the Iran-Israel conflict or the war. Doesn't like we're jumping right into that. Today is also Triple Witching Day, so a lot of option contracts are expiring today. So you could get a lot of volatility in the market. Looks like the Qs are starting to tank out right here, which is crazy. Coinbase is pushing though. We're in Coinbase. We're not in the Qs right now. So, but yeah, triple witching is going to bring a lot of volatility into the intraday trading day today. So be careful. I will keep trading light today if you are option trading. If you have open positions, manage those positions accordingly. Look to close them out, take some profits if you get a nice push today, and look to re-enter on Monday. And a lot of stock option repositioning is going to be taking place this Monday. We have Fed Chair Waller was talking this morning right before the market opened, says he believes that there could be a interest rate cut coming this July. So that's next month. And that kind of gave some optimism to the market and caused a little push pre-market. Let's see how long that lasts throughout the day. Nippon Steel finished the acquisition of U.S. Steel finally. That was a big deal that Trump was heavily involved in and pushing in order for steel manufacturing and productivity to be increased here in America, and kind of forcing the contractors and stuff to buy from those companies. If you need steel right now, they're probably going to be giving you the best deal, especially if you're trying to avoid the import tariffs on steel from other countries. This is why that deal is going to be a big thing. We had the TikTok sale deadline extended another 90 days. How many of you forgot about the TikTok is still on sale? Yeah, I know you did. I forgot too for a little bit. But TikTok is still on sale. That has been pushed back and delayed another 90 days. So when will this deal be completed? When will it be done? Who knows? But it's given another 90 days. Tax revenue is a big topic of conversation right now. Data centers and tax revenue. All these big tech companies that are coming to cities and states with the promise to install these data centers, or are looking for states to install data centers in. The states are now competing for that business. So they're offering them major tax incentives on the building out of their facilities when it comes to wiring, AC unit equipment. They're going to receive massive tax breaks on those pieces if they build within certain states. And more each states are trying to be more and more competitive, so those deals are going to be better and better. Is that good for the state? It may not necessarily be good for the state, because what they are seeing is revenue from the data center itself that it generates, but it may not generate revenue in a sense where it's creating more employment or really helping out the local economy. It just may be generating revenue on its own. Where does that revenue go? Who is it really helping? Who knows? Let's see. Meta is on a talent acquisition spree. Meta is acquiring a lot of big name talent in the AI field, and this is going to bolster their AI production over the next few years and make them one of the elite competitors in the AI field. Okay, they just got Daniel Gross and former GitHub CEO Nat Friedman. They just hired onto their AI team, and that is going to help them develop their projects going forward. So I like Meta. Let's actually pull up the Meta stock really quick. I want to see how they look today, because off that news they may have, oh, they did take a little jump. Oh, they back down below 700. I was just going to say I like Meta below 700, so we're going to chart them out. I'm going to see if I could find me a nice little entry on them, which is right here. I just identified it. We're going to see if we could catch Meta. Oh, I already had a line there. I'm sorry. We're going to change this to green. That's going to be an entry level. So if Meta pulls back to 688.50, I'm going to set me in a little alert there. So if we pull down there, I'm going to look to grab me a Meta call. This would be something I would swing probably like a month out, give it time to bounce. give things time to play out, like the Israel, Iran, all that kind of stuff. You don't know how that's going to turn out by Monday or by next week. But if I get a contract that expires a month or two out, it doesn't give me so much pressure to make a decision that quickly. I could let it move unless it hits my stop loss, which would be down here at 680. So if I get in at 688, as long as Meta doesn't go back below 680, I'll hold into that contract and see if we get that push back up to, let's say, 709, and then 725 will be the ultimate take profit. And Meta contracts pay very well, so just 2 contracts on that. If I get a contract down here, I may have to pay like $500 for a contract. But that 688 contract, when it gets to 709, that $500 is going to be like $2,500. Okay? Even if the contract is a month out, because Meta contracts move very quickly. Which is why a lot of people like option trading Meta. But they are pricey contracts, so be careful. And then last but not least, we talked about Circle already, and we understand the boom that had from the Genius Act, that bill that was passed for the stable coins. And that is going to wrap it up for news this morning. Let's jump live in the Discord. We got the news out the way. Let's get the trading session started. Let me see something. Let's get it started. All right, now live in the training room. Let me let everybody know. So, like I said to you guys earlier, I'm probably not going to be taking any kind of crazy heavy trades today because it's triple witching day. A lot of heavy option contract expirations. There's going to be a lot of volatility over the market. I may react off of something that maybe triggers an alert for me. Like this Amazon alert went off at 213. Oh man, I should have took the put. Yep, that was a put alert for Amazon to 213.93. And it's at 210 right now. I would have been out that put, could took profit. But that's the only alert I had go off for me this morning. So Amazon, and what happened with Google? That was Google early in the morning though. Okay. So yeah, right now. Yo, what's going on? Morning.
Morning.
How y'all feeling?
It's another day.
Another beautiful day, man.
Yeah. In the trap.
Another beautiful day, for real. Coinbase did me right this morning. Gave me another.
What contract you got?
Huh?
I said, what contract you got?
I had the same ones I swung through the weekend. I had the Coinbase.
Oh, you still held on to them?
Yeah.
Okay. So nice.
They went up some more. So I sold my last contract this morning on the long call. That went crazy, and then now I jumped in a short call. So the short call is high risk because this joint expires. I think this is actually deadly, never touch zero day. I hate to even say it.
Jesus.
Yeah, Jesus.
Yo, fellas, can you hear me?
Yes, sir.
Yeah.
Okay, cool.
Good morning.
Good morning.
What's going on, man? So, this morning, today. Oh, hold on 1 second, yo. So today is a triple witching day, which means there's a lot of option contracts that expire today. Which means there could be a lot of volatility in the price action today. You'll see like random dips followed by crazy rallies because everybody's trying to reposition themselves for this next quarter. So you're going to get this triple witching day I believe it happens once a month. Let me see. Let me pull up the days for this week. What is it doing? I mean, for this year. So March 21st. What?
I said I'll be here, but I'll be on mute. I gotta go back in the trap.
Okay. Yeah, every 3 months is pretty much a triple witching day. So every quarter. So the last one was March 21st. This is June 20th. Next one will be September 19th, day before my birthday. That's going to be a good one. And then December 19th. So this doesn't impact long-term investors that much, but if you are a options trader or investor and you have contracts that are expiring within the next week or 2 weeks, this price action is going to impact your contract. So anytime a triple witching day is coming up, you always want to make sure that you either prepared to take profit on your contract before that day or cut your loss before that day, because you don't want to go into the triple witching day down already on a contract, and then the price action goes crazy on you, and then you end up down even further, or you're in profit and you end up taking a loss because triple witching day came.
My bad. So you expecting the market to tank?
No, it's gonna be volatile. It's gonna be choppy today. So you got a lot of people repositioning, because think about it. You got contracts. Majority of option contracts are expiring today. They say like 90% of option contracts are expiring today. And that means people got to reposition for new option contracts going into the future. So people who are in those short-term option contracts, maybe a month or 2 months out, like today is a day that's going to heavily impact the price or value of those option contracts, because you're going to get a lot of chop price action. So if you don't got an expiration that's more than like 6 months, 3-4 months out, your contract's probably going to be all over the place today. And I wouldn't look to really buy anything today. I would just be more so position management. Keep an eye, make sure we don't do any kind of crazy dips. And if you are in something that's short term, honestly, take your profit and wait to re-enter on Monday. Or if you're already down on something, maybe cut the loss and then jump back in on Monday. Especially if you have a contract that expires next week. But if you have something that expires and you got time on it, you got 3 months plus on it, you could chill today. It's not gonna, shouldn't throw you off too much. Because by Monday, we're either going to make a decision to continue the trend up, which is possible given that Trump has delayed the invasion of U.S. into Iran, or assisting Israel on this war with Iran. We delayed that for a week. So at least through next week, we shouldn't have any kind of volatility due to that. But you never know. It's war. Anything can happen. Anything can happen. What else I had? Went over the news already this morning, so we're good. We're watching the charts right now. I don't expect too much today, like I said. Look at AMD. Let's go through some of the watch list companies here. Let's look at the 30-minute. So Apple trying to get back above 200. It made a nice push this morning. Rejected at 200. $200.63 is an entry level I have for you guys on Apple. So if Apple gets above $200.63, you could look to take a call, ride that up to 202, take your profit there. Remember, this is not legal financial advice. Always consult your financial advisor. This is for entertainment purposes only. All right. Don't try to sue me if you don't make money on your trade. I'm going to tell him. I told him. So, who we got in here right now? G, what's good, man? What you jump into? You jumped into anything this morning?
Nah, not yet.
Nah, just watching.
Yeah, I'm looking to see what Google do.
That's right. You was watching Google like a hawk. pull up the Google chart real quick. Alright, so Google is currently near the bottom of the 2 down on the weekly. We need Google back above 175.80. Google gets back above, actually, yeah, I'm gonna put my level right there. I had an alert at 176, but Google gets back above 175.80 before we close today. If we close above there today, then we have a good chance at being bullish by Monday. But I don't know though. You never know.
I'm looking for a little retracement.
172.80 was a level, a support level I got. It came down to it today, I think. No, I didn't hit it today. That was pre-market. It hit a pre-market. Yeah, so 172.80. If it get down there, I like that, playing that level as a bounce level. Let me see. That July rate cut is battling against the Iran and Israel potential of U.S. jumping in that right now. If we didn't have the potential of jumping in the Iran-Israel war, the market would be pushing right now. But because people feel like we have potential of joining that war, the market is going to stall out in combination with the triple witching that's happening. So it's important to be informed when you're looking at the stock market and know what's going on, because it gives you a good idea of how the market is going to potentially move for that day or that week going forward. Right now, we know today is most likely going to be a choppy day. We could see Microsoft push to 485 again and then come all the way down to 480, 479.50. It could be that kind of day. This is why I said anybody that's in short trades right now, if you got profit, take your profit. Get back on Monday. I'm watching Coinbase right now. Oh, Meta came down to the entry level, y'all. 688.41. I think I might touch Meta down here. It's back up at 691 already. Sheesh. You see? Why didn't this alert go off? Maybe it never crossed it. Let me clear my alerts. I need a fresh slate. I want to catch Meta below 700, bro. 689 is where I prefer. Meta is doing talent acquisition like a mug, bro. They're getting a lot of big names that are big names in developing other AI companies. Meta's recruiting a lot of them into their company now. They're paying them to come over. They took CEO from GitHub. They bought him over to Meta. And they took another guy that's part of this $3.4 billion AI company that was just developed. They tried to buy the company, and when they figured that they couldn't get the company, they just bought the CEO instead. You could do that when you got the money. Oh, let me share my chart with y'all. I'm sorry. I didn't know my screen wasn't sharing with y'all. Tyrone, what's going on with you, man? What you in over there? Oh, I guess Tyrone not here. All right. So today, like I said, I'm pretty much focusing on Coinbase. I'm gonna watch for Meta to see if they.
Oh, yo, you hear me?
Yeah, I can hear you now.
Okay, I had it on mute by mistake.
No, you good. So you in any moves? You in any trades from yesterday or earlier in the week that you still in, or you know?
No, I did pick this morning. I did a quick scalp. But I caught that quick one, the open on Tesla.
What you do? A call or a put?
On the calls, and then I came down. Once it came down below the low, I jumped in a couple of dollars. I jumped in on the first candle on the 1 minute.
Uh-huh.
Then I came back down on that 327 when it dropped below that one. Then I jumped back in on the puts real quick. Just a quick scalp. I'm trying to get with you guys on this long term of overnights and a week out.
Yeah, so the main thing I heard you say, the 1 minute chart. I don't never look at the 1 minute chart.
I know you guys. Y'all on the 4 hour?
I will go down to the 30-minute. I'll look at the 30-minute chart if I'm looking intraday. I want to see intraday price action. I'll look at the 30-minute. But when it comes to setting price levels and entries and exits, that comes off the weekly chart. But as I'm watching the trade, I'll watch momentum on the 30-minute and see how momentum may be shifting. Especially when it gets close to like a take profit or entry level, I want to watch it on the 30-minute to see how the price is acting. Yeah, but the 1 minute chart, yeah, that's that super scalping, boy. That's like you trying to, like you said, scalping the opening price action, which is the most volatile time of the day. It's like you're gonna get crazy movement up and down. So people try to take advantage of that.
Yeah.
But that thing could burn you too.
Oh, it could be dangerous. If you try to hold on it and it pulls back, you're in trouble.
Yeah, that's like something you gotta be. You talking about you buying off the minute chart? That means you gotta be making your sell decisions based off like 30-second moves. So you gotta be in and out.
I'm trying to move away from that. I'm trying to get the ones where I set it, like when you said the price levels,
Right.
and let it just see which way it's gonna go,
and
then get in and out, maybe a week out, 3 or 4 days out.
Right.
But as you said, that's on the weekly, right?
Right. I'm setting levels. I set my price levels off the weekly chart. So what happens when you set price levels on the higher time frames, usually more times than not, that price level is going to be a very strong level. So if the company breaks above or below that price, you have more of a chance for it to keep going in that direction because it's a higher time frame that you're setting the price level off of.
Right. That's what I'm. So like on you go in on the option chain first, right? You go on the option chain, and you get that weekly. Like we're in the weekly on June 20th would be, right?
We're in the. You talking about the contract?
Yeah, if we're going out, we go out to June 27th, wouldn't we?
If you are looking at, so it all depends on two things. It all depends on, you see the price levels that I call out, right? I call out price levels in the price level room in here in the chat in the Discord. So I give the time frame on those call outs on how far out you should be looking for the contracts on the right hand side of the chart. It tells you, like, it should be weekly contract, daily contract, or monthly contract. And each of those come with different time frames. So a daily contract will be like you're looking for something, a contract that expires at least 1 week away, but no more than 4 weeks away.
Okay.
A weekly contract is something that you want to find expiration on option that expires at least a month away, but no more than 4 months away.
Okay.
And then if you want to do a long call or a long put, which I typically don't do long puts, but long calls will be a monthly contract. Those contracts are going to be at least 4 months out or more. Up to 2 years out, you could go on those.
Wow. Yeah.
Yeah.
But even if you go in on it, if you see something you could always come out of it.
Yeah, you can always sell anytime you want. You know, you can sell any moment you want. You can sell it and go into another position. If you see an opportunity arise, or you want to get into something that is a little more risky, then you could go ahead and try that contract out. But these time frames that I give, I give them on these contracts because I'm looking at the chart off of a certain time frame, off a weekly or monthly, and I see that you're going to have to give it a certain amount of time before it hits the price targets that I put on there. So if I put the call targets and put targets and I give you a daily contract time frame, that means you want to get a contract that expires at least 1 week out and or 4 weeks out to give the move time to happen that I'm saying is going to happen.
Right. Now, do you trade on which I trade right now on there's one called Moo and Thinkorswim.
Okay. Yeah, I know people that trade on Thinkorswim. I never heard of Moo. I don't know. I don't use that one. I use
They don't have any fees.
Oh yeah.
Transaction.
Oh,
Yeah.
word. Yeah, I never heard of them, but I know
Yeah.
Webull, E Trade, Robinhood. Those are the platforms I use the most.
Okay. Okay.
Yeah.
Got you. So yeah. So mostly I do think and swim, and
Okay.
and when you go in, you look at when you go in for your charting, right?
Mhm.
Um, you go. You said you're going on the lookout on the 30 minute, and I got to go to some of your charting sessions. So when I think you got one coming up on the 22nd.
Yes, sir. On Sunday charting session.
Yeah, I'm gonna be in on that one. So this way I can ask you some questions on that one.
Yeah, yeah. I'll show you exactly how we go about finding the price levels, and then after you start learning, you're gonna take some time and practice to figure out the price levels. But once you understand how to set the price levels, then you're gonna start to try to learn how, based on those price levels, how far out your contract should be, and et cetera, et cetera. I'll teach you how to do that. But until then, the main thing
Yeah.
for you to do is get the price level chart and set your alerts at the call entry levels that I put on there.
Yeah.
And the put entry levels, put price alerts on your chart, whatever chart you use. I use TradingView to do most of my charting. So
Okay.
that's why I set a lot of my price levels and alerts off of that. And
Okay.
that's why I set a lot of my price levels. Was set your
Oh, okay.
That's why I would set my price alerts that I put in there on the call entry and put entry. Set your price alerts on TradingView or whatever platform you use to do your charting, and then just react when those alerts go off. Because you get an alert, you may not remember exactly what it's for. You may see Amazon 215 alert go off. You go back to the price chart, you see, oh, that's the call entry. Or you could leave a note. Sometimes when you set alerts on the platforms, they let you leave like little notes, so you can put like, oh, this is the call entry, and this is put entry. So when the alert comes up, it will say call entry alert or put entry alert.
But right now I'm looking at your one that you put up on June 18th, right? That's the
Right.
last one you put out.
Yeah.
And I got the price levels on Amazon, Coin, Google. Now the Google that you ever had, there's two Googles, right? There's a Google with an L at the end of it too. You got
Yeah.
Google GOOG, and there's another one GOOGL.
Yeah, I do the GOG, the Class C shares. Google has like 3 different types of shares out there that they sell. They got their preferred shares, their Class C. But the one I
Okay,
type in
okay.
GOOG, and whenever it
Yeah.
comes up on
Okay.
like Robinhood or something, it should say Class C if it's gonna say anything. If it says anything separate, just make sure it's not the Class A shares. Class A shares move slower.
Okay. Now on these targets that you got I see call entries. Okay, you want to get in at select Amazon.
Right,
That one on the price level. You want
right,
to get in at 215.87.
right.
Right there.
Mm-hmm.
That's the first target. That's the first target.
Yep. 215.87 is when you enter when you enter the trade.
Entry, right, right. And then you hold on to it with a 216.41. That's the first target.
Yep.
And there you go. If you stop out, if it drops down below, you said Paul stops. If it dropped down to 214.50, that's the you
That's
should
it.
come out at.
Yep.
Just cut that profit.
Yep.
Okay.
Cut your loss there. If it goes down, if it starts
Yeah.
closing like so based off of these contracts, right? They give you certain stop levels, but you only want to react to the stop or the call entry if you get a certain time frame candlestick closing above that level. So the call entry on Amazon 215.87, but it's a weekly contract. So you don't want to enter the very first time it touches over 215.87 and you see it on maybe like a 5 minute or a 10 minute chart, right? Because it could reject off of there really quick. What you want to see
Okay.
is
Yeah.
that you want to see now, once it gets to 215.87, I tell people you want to see at least an hourly candlestick close above that price level. Once you get like an hourly
Okay.
candlestick close above that price level, or even better, if the day closes above that price level, then you know, all right, we're going to hold that level. Now I can have a better chance of success if I enter now. You know, some people,
Okay.
it's not as soon as the price goes up because it could go up and then within that same hour it could come right back down below the entry price. You know, so you want to give it like the hourly candlestick time to close, and then you know, okay, this is a better time to enter versus the first alert
Okay.
that goes off.
How many contracts you usually go in with? How many contracts on? Do you go to like the what is it called? when you go in, do you look at the strike level you going in at, or you just go, you look at the strike?
I go in based off of my target price that I know I have set, like what target I'm looking for in the option. So if I have that, like if we was just talking about,
strikes,
huh?
say like Amazon.
Mm-hmm.
You got the strike level. You know, if you're going into the calls at 215 strike, 220 strike. You know, as you go further out of the money, the contracts get cheaper.
Right. So you look at the time frame. I say so for the Amazon, it was a weekly contract. So that means you're going to get a contract that expires at least 1 month out. So you could have your starting point there. You will look at a contract that expires. You go to Amazon. You go to Amazon contracts that expire 1 month out and see the cost of those, and then you're going to determine based off the cost of those which one can you afford. Based, you know, because everybody has different level of capital. So some people may not be able to afford the contract in the money. They may have to go further out the money. So it doesn't really matter. What matters is the fact that you're doing something that is within your risk management profile, and that is when it hits that target price, you're going to be happy with the profit you're going to take when it hits that target price that I have set on there. You know, because that's ultimately where you're going to be getting out at. Irregardless what your strike ends up being, whatever. You're going to get out at that profit, at that take profit.
What you can afford. The strike is not really that.
Right.
The strike really is that. It's the where your money's at.
Exactly.
You want to play with $1,000. Then you go with a strike. I mean, you go with
the contracts you could afford. You know, whatever. Maybe you want to get one contract. Maybe you want two. I always recommend getting two contracts. Getting a contract that you could afford at least two of them on, so you could shed and hold a runner. Because sometimes the runners go crazy for you, you make a lot of money, but at least when you hit the target, you know you locked in a profit on one of the contracts, and then you can let the other one run and do what it wants. But the main thing is the price level. So, for example, Amazon. You see Amazon. You see the put entry at 213.80 on Amazon, right?
On Amazon, yeah, I'm on Amazon now.
So
I'm on a chain actually on. You looking at the chart, or you looking at the option chain?
I'm looking at the price levels that call out, and I'm looking at the chart.
Oh yeah. I see you. Got you. 215.87. I got that up.
Yeah. So the 213.80 was the put entry though, right?
Right. Yeah.
So now let's say we caught that this morning, because that triggered this morning. I got an alert on Amazon. My Amazon alert kept going off at 213. That alert.
On the chart, it dropped. You're right. It came down.
So now you see if we click that entry right here and look, that black line is the first target. This would be target number 1. So you would take your profit. It came all the way right down to the 212.25 target that I gave. So boom, right there you take profit. And now the second target is a little bit further away, 209.55. That's the higher risk target. But if you have two contracts and you shed one right here and you lock in that 30-40%, that second contract is down here. It may not get to the second target, but as long as it doesn't come back above here, because if it comes back above here, is where you're going to cut it, and you're going to take the profit right there. But right here, you're making much more money on that runner because it now has potential to the second target. You know, now 209.
At 209.
And then
I'm showing on the 30-minute, it came down to 210.
Exactly. So it almost came down to 209, but it didn't quite come. But now you already took profit on one contract at 212.
Right.
So now this one is this is like ultimately like free money because you already locked in a good like 40% profit on one contract. So now as long as you don't let this contract go into the negative, you're going to make money. You made money today already. So right now you're just waiting to see if you could make more money. So as long as this doesn't come back above that first target, this will be your new stop. So if it comes back up to the first target where you took profit already, now you will stop out of the second. You'll stop out of that runner. You'll take profit and just close the contract and be done for the day. But if it comes back up to 212 and doesn't go to 212.24, comes to 212, then it could tank right back down to 209. Then you take profit down here on that runner, you know? And then you had a really good day. And then you take profit down here on that.
So let me ask you a question too. On when you go in and you purchase it, right? Now, you know you got unsettled funds. I'm working the cash account.
Mm-hmm.
Some people on margin.
Right.
You work at a cash account. Those funds come out. They don't go back in until you sell, and then the next day it goes back into your unsettled funds.
Right.
So if you hold it for a week, those funds are not available until you sell, right?
Right. Absolutely. No, you gotta. Yeah, it's not gonna be available to you sell, and it's not gonna be available to the next day after you sell.
Yeah, after you sell. Okay, got
Yeah.
you. Got you. Because if you got $5,000 and you use up like I said, you go in and get 2 contracts at 1,000, you still got $4,000
Exactly.
to make when you sell.
So you could have got
And
2
then
contracts this morning at 1,000 at that 213.90 level when the put triggered, and you would probably came up a good $600-$700 today.
yeah, that works for me.
You know, and you would have been done. Boom, I'm out. I'm good on the day. That's it. You know, that's all we looking for. We're not trying to be greedy. We're not trying to gouge the market. We're not trying to catch every trade in the book. You know, you just you find whichever target on whatever company on the price call out list that you like to follow, put in that alert, and hit the play. And that's it. That's it.
So my thing is not. Let's go back again. Now, on the option chain, right?
Yeah.
Okay, right now I'm on because we did the short thing. All the contracts are ending today.
Mm-hmm.
The contracts.
Mm-hmm.
So it's a 20. But if I want to play out next week, I go to the next week's, which is the 27th, right?
Next week is yeah. Mm-hmm.
7th.
That's next Friday.
I want to go to, so I go to next week's and play on that one. I play on whatever amount of contracts I want to do in that one. Just set it and watch put my alerts on for the targets and entry.
Right, but that's only if the time frame I put is daily contract. So if the time frame I put is a weekly contract, you want to go at least 1 month out from where we are today. So you want to go at least till July 20th, or maybe go to the July 18th expiration, and look for contracts there.
Like because I didn't notice that, so I just seen it. You said daily, like coin, you have the daily contract.
Right. So you could do something 1 week out on Coinbase, you know.
Okay, got you.
But you don't want to do that with the Amazon call out, because the Amazon, I obviously put that time frame because I know you're going to need more time for that move to play out for you to make that money. It may happen shorter. Sometimes it happens within a day, and I'm being cautious, and you get that 30% within the first day of the trade. Take that money. Don't be like just because you got a call that expires 1 month out and you hit your profit in the first day that now, I might as well hold it for more. No, take that profit. Take the money.
Hey, how often do you when you go in to a week out, do you check it every day or you check it twice a day?
Yeah, you check it. You check it. So one, you got your price alert. So once you go in, right, and you enter a position, you got to set an alert at your take profit level. So now so the alert went off for your entry. Boom. So all right, that alert's done. You entered. Now you're gonna put a price alert at the first take profit level, the second take profit level, and you're gonna put an alert at the stop loss level. So then you don't really have to watch it. Now you're just waiting for one of those alerts to go off. So whatever of those 3 alerts, whichever one of those alerts go off first is the move you're gonna make. So if your stop loss alert goes off first, then you say, oh shit. All right, the stop loss alert went off. Let me look at the chart really quick. What's happening? It's like we're about to close below it. It's like we're bouncing off of it. All right, like we're about to close below it. Let me stop out. Let me cut my loss. All right, boom. The alert went off for the first target or the take profit. Let me look at the chart now. Oh, man. All right, let me take my profit here on one contract, and I'll hold one runner, and I'll watch the alerts again. So you pretty much just setting alerts, so you don't have to sit there staring at a chart all day.
Right. The alerts let you know.
Right.
And do you out in the street? Do you go off your phone too?
Yeah. Oh yeah. Man. Oh yeah.
Okay.
On the street, on the move, man. I trade anyway. I trade on the beach. I'll be somewhere. Alert go off. I make a move, man. It don't matter where I'm at.
I never do the phone thing. I always at my station.
Oh yeah. Now you gotta download the TradingView app on your phone, so when the alerts go off, they hit your phone, and then you can make the moves right there if you need to from your phone. You know.
I have TradingView on here too. I got TradingView, I got Moomoo, and I got what do you call it? Thinkorswim.
Okay.
Schwab. So I got all 3 of them on here. So I just got to get used to looking at this and hitting the buy and sell.
Right.
From the phone,
Right.
you know?
Exactly.
And how to set it up when I'm going in.
Exactly. You can set up everything from your home at the computer, set up all your alerts and everything, and when you take your phone out with you, the alerts will just hit you. And then you just, like you say, you just gotta know how to buy and sell on the app. You gotta learn how to use the mobile platform.
I gotta download TradingView on my station here.
Yeah.
I'm used to. I got 2 screens, so I gotta really get used to the one screen. You know what I mean?
Okay.
So I I gotta download it here. I'm gonna mess around with it later on today. Download the trading view.
Yeah,
So I
download
can,
and mess around with. If you need help setting anything up, you let me know. I'll help you set it up. I'll help you with what indicators that we use, because we use certain indicators to show us certain like momentum on a stock or on the market. It gives us signals like the strat indicator, like momentum indicators that we use. I'll help you set it up so that you have a nice little setup
yeah,
going.
yeah. I'm definitely gonna. I'm gonna not move away from the scalping, but just another way of getting money. You know, getting a little bit. Not like you said, don't get greedy.
Yeah, exactly.
$300 or $400 or $100. I'm good.
I'm
You know
good.
what I mean?
That's it.
And build up from there. You know what I mean?
That's it. It's all about building long-term wealth, man. The big pops are going to come because we're going to catch some of those. You know, the biggest thing is to not get hit with the big losses. You're not going to catch every big pop, but if you could avoid if you could not get hit with any big losses, even if you don't catch every big pop, your portfolio is going to grow much faster than someone who is trying to catch every single move.
Okay, gotcha.
You know, because they're gonna take some big gains. You're gonna see them post some days. Oh my God, I made all this money in this trade. But then they're not posting the days when they're getting hit for all that money too. When they take a risky trade and they get smacked.
Whenever they getting hit, whenever they're making money, oh man,
they posted 100 times, boy. You can't find the losses though. You swear people take no. I'm saying I don't know no trader out here taking no losses, but that's how the internet make it seem.
So what happens on the what's the name? When they take a loss, it gets quiet on the set.
Real quiet, yeah.
It get real quiet. They hit. They go, yeah, man. I just got 3 stacks. And I'm like, yeah, they yelling. As soon as they hit, I'm like, yo, anybody there?
Yeah, they ain't tell you when they lost 3 stacks though.
That's crazy, man, how they do that.
Yeah, and that's why I put a channel on my Discord. I put it in here, like I put it in here to share profit channel, but losses and lessons. I want people to put the losses you take in here because that's what you really learn from. People think you learn it from winning. You don't really learn from winning. You learn from the losses. So when you take the losses, you got to figure out why you took it. Like, damn, what did I do wrong? Was I too? And then the more you analyze your losses, you start realizing, oh, this is really basic little stuff I keep doing wrong that's making me lose money. And if I just stop doing those things, my win rate will go up so much more. And yes, I'm not gonna be taking as much risk. I may not be trading as much, but I'll be making so much more money. It's worth it.
Mine was I was holding too long. And when I stopped holding so long, I was in the green more.
Right.
But when I was holding too long, trying to wait for that bounce back and come back up, that's when I was losing it.
Yeah.
It goes the wrong way, and then you holding it too long, you lost $200-300 real quick. I'm like, dang.
Yeah, especially in options, because that theta starts kicking in if you holding a stock.
Yeah, yeah. So y'all don't do the option. Y'all just do how you do it on this one.
Nah, we do options. I do option contracts. That's what mostly we do, option contracts. I got some people, but here's the thing with the price levels though, because this is the beautiful thing about it is that you could do this with option contracts, or if you have somebody that I have people in here that just trades stock. They'll buy, they got like they'll buy $100,000 worth of stock, and they'll sell it within the same week, and they'll still make good money on the price levels because the price levels, a $10 move for them will be like a $10,000 gain, even though it's not an option contract, you know. So they're good with the stock moving up 10% versus an option contract. They don't have to be that risky, but the price levels still help them know when to get in and when to get out. So the price levels are universal. This is about how you want to use them. You could use them for options. You could use them for Forex. You could use them for stock trading. You could use them for shorting the market. But the levels let you know where you're going to get activity at, whether resistance, support, continuate, whatever. It's going to let you know. But if you go in and trading and you don't got levels, like macro levels set, you pretty much gambling. You're gambling based off of what you hope happens off of the opening candlestick action. And all that stuff is very, very short-term information that can change in an instant.
You're right.
But weekly and monthly charts, they're usually going to tell you what's about to happen. They're not going to veer off too quickly on you.
And that's what I'm looking at. I'm looking at the weekly, monthlies.
Yeah.
And so I could see and look at the charts, because I chart almost every day.
Okay.
I chart for the short term.
Right.
Like the scalping. I don't chart for the long. I got to get used to now charting for the longer term. You know what I mean?
The beautiful thing too is when you chart when you chart the long term price levels in, you don't got to keep resetting them. You know, because a monthly level is a monthly level. It's going to stay that level. It's not. That's not going to change. You know, so it's either going to go above it or below. But the intraday levels, like you said, you got to set those every day. You got to set those almost every day.
Yeah, every day you got to go into there and set those to see where you're at.
Yeah, I didn't feel like working that hard, man. Intraday trading is a lot, and day traders on that trade on that level, that trade that often, that frequently, they don't make as much money as you think they make.
Yeah.
Like by the end of the year, they may end up making like $50,000 by the end of the year after all that trading, all that hard work, all that charting.
Wow.
You know.
Wow. Yeah. So I'm gonna change around a little bit. My boy, he said, "Yo, Ty, when you learn it, he's gonna come in too."
Nice.
He's interested too.
Okay.
I gave him. I told him to go into Discord and download it. I sent him your
the link.
Your web.
Okay.
Website that you sent it to him too, so he might be getting on soon.
Okay.
What time you starting on Sunday?
7 p.m. on Sundays.
Oh, 7 p.m. Okay.
Yeah.
Ugly dump off today, boy.
Ugly dump right now. I'm looking at it right now like, oh, this just got ugly real quick.
Real quick, boy.
But I don't know if you heard earlier, it's triple witching day, so heavy option contract expiration day.
Oh.
Yeah. So a lot of people repositioning today, boy. Let me slide off the live over here off of YouTube. Appreciate everybody that came through on YouTube and TikTok today. I'm going to shut down the live for you. We're going to go exclusively into the Discord. Make sure you subscribe, become a member so you could get these price levels and be part of these charting sessions and become more successful in your investing journey. All right, become a culture shocker today. Subscribe to the YouTube page. Subscribe to the Discord. It's where you're going to get the most value. And I'll see you all on Monday, actually Sunday, for the charting session at 7 p.m. live on TikTok. And then, class at 7 p.m. and charting session at 8 p.m. on Sunday. So we do the stock class at 7 p.m. I got a beginner lessons going on for people who just started investing, taking you step by step on what stocks are, what the stock market is, how to understand reading the stock chart and the page. I'm going to give you step by step guidance on that. We're on about lesson 4 right now, so you're not too far behind if you're joining now, but that's at 7 p.m. on Sunday. And at 8 p.m. we do the charting sessions where we get busy with the pricing. And I'll help you understand how to find price levels. All right, everybody that came through the live